The scary AI story isn't a robot stealing from your agency. It's your own AI spending your money exactly the way you set it up. The payment cleared, nobody approved it. Nothing broke, no fraud. The charge posts, the vendor's legitimate, the books all balance. And 6 weeks later, nobody in your shop can tell you who authorized it or why it was allowed. That's the real problem I want to talk about today, because it's about to land on a lot of agency owners, and there's a one-page fix, so let's go. Quick note before we get into it, I've made 3 other videos about AI and your money, and this is the 4th thing, totally different. The first was about what AI costs you. Another was about how you price so your client doesn't pocket your savings. And the third was about how to measure whether it returned anything, what it costs, how you price it, what it returned. And today it's what it's allowed to spend. Those are all about money you decided to move. Today is about money the software decides to move. Different question, and nobody's asking it yet. There's a piece that ran in the CPA Practice Advisor on July 23rd by Andrew Jameson. He's the CEO of Extend, a spend and expense platform. And before that, he ran B2B corporate payments at American Express. So he's watched a lot of company money move. His argument is that the biggest risk in what people are calling agentic commerce, meaning AI that doesn't just recommend a purchase, but actually makes it, is not fraud, but it's unauthorized spend. And here's the definition, because this is the part people will miss. He means spend a system was able to initiate because the agent's authority was too broad, the controls were too loose, or the audit trail was too thin. Read that again. Nothing in there is a crime. His line is that a payment can go through exactly as designed and still create a governance problem. That's the whole video in one sentence. The transaction worked, the control failed. And you already know how to think about this. You just haven't applied it here. When a human spends your money, there's a path. There's a policy, somebody approves it, there's a card holder, there's a reason on record. It's clunky, but you can see who's responsible. AI compresses all of that into software. An agent goes from instruction to transaction in seconds. It's generally useful, but it also puts every bit of pressure on a control system you built around humans and monthly review. The cop analogy would be authority and the memo book. Now, I spent 17 years in the NYPD and retired as a lieutenant, and this is the part where the background actually helps you. In the NYPD, you were handled real authority, serious authority, but it never came alone. You didn't act because you felt like it. There was a reason. There was a threshold where you kicked it up to a supervisor. And every cop carried a memo book, time, date, what you did, why you did it, written down as it happened. Today it's all done on a phone. 3 pieces. Authority that's defined, a line where somebody above you has to say yes, and a record made at the moment, not reconstructed later. Take away any one of them and the whole thing stops being accountable. Broad authority with no threshold is a guy doing whatever he wants. Authority with a threshold but no record is your word against theirs. And a record nobody can trace back to who is allowed to do what is just paper. Now look at how most people are turning AI loose on their spending. Broad authority, no threshold, no memo book. Authority is defined as handle the recurring stuff. No hard line where a human has to say yes. And an audit trail that's a credit card statement, which tells you a charge happened and nothing about whether it should have. I would never have run a platoon that way, and you don't run your money that way. So where does this show up in an agency? Let me make this very concrete, because when people hear agentic commerce, they picture a Fortune 500 procurement department and tune out. Jameson's example is deliberately boring. An AI assistant is allowed to handle recurring operating purchases, and it renews a software subscription that looks routine. It posts clean, it's a real vendor, but the contract terms changed, or the amount crossed an approval threshold, or it hit a merchant category that should have triggered a look. And his point is that the question stops being whether the agent did the job. The question is whether the system was built to notice, to flag it, hold it, or deny it. If it wasn't, it just goes through and nobody finds out into an audit. Now here's a comparison from the article I actually like because it's the difference between a human control and a machine control. Say you've got a $20 review threshold on employee cards. Even a reviewer who's rubber stamping everything is going to look up when an $8.99 Netflix charge or an $11.99 Spotify charge shows up on a card that has no business of having either one. A human is going to catch that at a glance. An AI approver will not catch it unless somebody explicitly told it to care about merchant category. And if nobody told it, and likely nobody told it. So those clear quietly for months, compounding until somebody finds them during an audit. Now put agency close on this. 4 places it lands. 1, software renewals. You already have subscription creep. You've got tools nobody's opened since the spring. Now imagine a system whose actual job is to keep the stack running. Renewals stop being a decision anybody makes. 2, vendor and freelancer payments. New vendor, first invoice, no W-9 on file, paid. That's not a spending problem, that becomes a January problem. 3, travel. A loose category, real dollars. The substantiation rules are strict, and more on that in a minute. 4, and this is the one I actually will lose sleep over. Media spend. Client media budgets, not your money. If you're running paid media, you are already moving other people's money through your accounts. Pass-through billings, big numbers that inflate your revenue and never touch your AGI. Now the platforms are all shipping AI that optimizes budget allocation on its own. So you've got software authorized to move client dollars at machine speed against a budget cap somebody approved in a kickoff call 3 months ago. And when a client asks why 40% of the month's budget went to placement they never signed off on, the tool decided. It's not an answer that survives that meeting. That's not a technology problem, that's a trust problem, and trust is the whole business. So why am I, the CPA, the one telling you this? Because I'm the guy who sees it downstream. And downstream, it can cost you 3 ways. First is deductions. For a business expense to hold up, it has to be ordinary and necessary for your business. And the burden of proving that is on you, not the IRS. For some categories, travel being the obvious one, the documentation rules are tighter still. A charge on a statement with a vendor name and no contacts is not a record of business purpose. If your bookkeeper is doing what any reasonable person does with a mystery charge, they may guess, or they park it in a catch-all, ask my accountant, and maybe get back to it in 6 months. Either way, you paid full price for something and got a discount you cannot defend. Second is your monthly close. Every charge nobody can explain is somebody's afternoon. Multiply that by a system generating them automatically, and your monthly close gets slower and less accurate at the same time. That's the opposite of the reason you brought the AI. Third, and here's the real expensive one, your valuation. If you ever sell the agency, a buyer is going to go through your books. And what they're really doing is testing whether they can believe the numbers. And they find spend that nobody authorized in an account nobody can trace is exactly the thing that turns a clean process into a discount for the buyer. Not because the dollars are big, but because it tells them controls are soft, and now they wonder what else is. Because remember, the buyers aren't going to discount you for the amount, they're going to discount you for the sloppiness. So Jameson puts it better than I would. If you can't trace a transaction back to a permission set, a rule set, and a chain of approval, you don't have automation, you have automation without accountability. That's fine for a demonstration, but not fine for your business. So the 5 questions, your spend authority sheet. This is the fix, and it's generally 1 page. Before any AI in your shop is allowed to touch a card, an account, or a media budget, you answer 5 questions in writing. These come straight out of the article, and they are definitely the right 5. One is, what can it buy? Here we want named categories, named vendors, where you can manage it, not operating expenses. The whole failure mode here is a definition broad enough to be convenient. 2, on whose behalf? Which entity, which client, whose card? This is the one agency skip, and it's the one that matters most the second client media money is in play. If the agent can spend on behalf of a client, that client needs to have agreed to that in writing. Say it out loud, in your scope, not in a Slack message. 3, is there a ceiling? on the amount and on the velocity. Two numbers, and almost everybody only sets the first one, per transaction and per period, because a system that can make $400 purchases can make 40 of them before lunch. Velocity is a control, so use it. And for what needs a human yes, a new vendor, an amount over your line, an unusual merchant category, any changes to existing terms, and the important part, and this is Jamison's sharpest point, that has to be enforced at the point of transaction, not written in a policy document. A rule the payment rail actually blocks is a control. A rule in a Google Doc is a hope. 5, if something goes wrong, what justification can be produced? This is the memo book. Not can you find the charge, but can you produce what the system was allowed to do, what rule let this one through, and who set that rule? Written at the time. If the answer is we'd have to piece it together, you don't have a trail. Number 5 questions: what can it buy? On whose behalf? What's the ceiling on amount and speed? What needs a human yes? And what can you produce afterward? Remember, this isn't an AI policy. There's not one word in here about which model or which vendor. It's the same delegated authority sheet you'd write for a person, and that's the point. You already know how to do this, you just haven't done it for the software. All right, before you go, if you're an agency owner and you want to keep more of what you make, I've got 2 things for you. First, grab a copy of my book, The 12 Biggest Tax Mistakes That Cost Agency Owners Thousands. It breaks down the exact mistakes I see every day and how to avoid them. Second, if you want to see what this looks like for your business, get a free tax analysis. We'll take a look at what you're doing now and show you where you might be overpaying. And if this video helped you, make sure you subscribe so you don't miss future strategies on tax planning, cash flow, and building a more profitable agency. I'll see you in the next video.